Welcome back to another Explainer. Focused learners, I'm really thrilled to have you here today because we're looking at a truly fascinating business case study straight out of the fiscal second quarter of 2026. We are unpacking the financial results of Coda Octopus Group, you'll hear me call them Coda, a global market leader in real-time subsea intelligence and some really cutting-edge diving tech. Whether you're an investor, a strategist, or honestly just someone who loves dissecting a complex financial narrative, we're going to map out an incredibly unique corporate situation today.
Okay, let's dive right into this, because right out of the gate, we're presented with a glaring financial paradox. How exactly does a company manage to boast its net income by an astonishing 87% when the revenue from its absolute core business segment drops by nearly 27%? I mean, in traditional business logic, when your main revenue engine sputters, your profitability takes a massive hit, right? But Coda, they managed to do the exact opposite in Q2 of 2026. Let's solve this mystery step by step.
All right, Section 1, the Q2 earnings paradox. The contrast here is just stark. Coda's core engine is their marine technology business. That's the segment responsible for their flagship 3D sonar products. Now, in the second quarter of 2026, revenue here absolutely plummeted by 26.8%, dropping from $3.9 million down to $2.8 million. Yet, look at the other side. Net income, after taxes, actually shot up 86.8% to $1.7 million, compared to just $0.9 million in the same quarter the previous year. It's this incredible divergence between a top-line contraction in their core segment and a complete bottom-line explosion.
And this brilliantly illustrates the real-world value generated for shareholders, despite that intense top-line pressure. This isn't just some clever accounting trick. It directly impacted their earnings. Net income nearly doubled, stepping right up from $0.9 million to $1.7 million. And consequently, diluted earnings per share, or EPS, followed the exact same trajectory, climbing from 8 cents in Q2 of 2025 up to 15 cents in Q2 of 2026. The financial data here is just undeniably strong.
Moving on to Section 2, diving into the financials.
So why the big drop in core revenue? Well, it actually wasn't a sudden lack of product demand or a failure in their tech. As CEO Anne-Marie Gale pointed out in the earnings report, their core marine technology business sells globally, and a significant chunk of those opportunities originate from the Middle East and Asia. Ongoing geopolitical conflicts involving Iran have created a lot of instability in these key markets. And the operational takeaway for us is pretty simple. Regional instability means major offshore commercial projects just hit the pause button. And when those projects pause, the purchasing of subsea equipment pauses right along with them.
But this is what reveals Coda's structural resilience. Think of their business model kind of like a giant seesaw. As the Middle East and Asia marine sales went down due to those geopolitical headwinds, their secondary business units went up to compensate. Their defense engineering services business, which supplies mission-critical subassemblies to prime defense contractors, saw revenues surge by 37.9% up to $2.5 million. Meanwhile, their acoustic sensors and material business grew by 17.5% to $1.5 million. This diversification is exactly what kept total revenue virtually flat. We're talking only a 1.6% decrease overall, despite taking a massive hit to their core division.
So here's the crucial point. If total revenue was roughly flat, how on earth did their profits double? Well, it comes down to one single number, 21.4%. That is the percentage by which Coda decreased its selling general and administrative expenses, what we often just call SG&A. In plain English, they ruthlessly slashed their overhead. By dropping these expenses from $2.7 million down to $2.1 million and pairing that with a slightly better gross margin, their operating margin expanded massively, from 15.5% to an incredibly impressive 26%. They simply sold a different mix of products and they spent significantly less money doing it.
Okay, Section 3, shifting business tides.
Let's establish exactly what gives Coda its brand authority, because they aren't just some generic manufacturing company. Since 1994, they have literally been the pioneers in real-time 3D, 4D, 5D, and 6D imaging sonar. Their Echoscope technology lets operators see moving objects underwater in real time, even in complete zero visibility conditions. We're talking usage in everything from complex underwater mapping and offshore renewables to search and rescue and port security. They really own this underwater intelligence space.
And now they are taking that proprietary sonar tech and integrating it into something entirely new, the DAVD, or Diver Augmented Vision Display. Think of this as a high-tech heads-up display for divers, effectively turning them into underwater Iron Men. It integrates topside control directly with the display worn by the diver. It allows both the diver down in the water and the command team up on the surface to share the exact same visualization of the underwater environment. It completely transforms how defense and commercial diving operations are conducted, especially when you literally can't see your own hand in front of your face.
Which brings us to a massive inflection point for the company. Step 1. The extensive R&D phase for the Day VD is now officially complete. Step 2. They've already delivered 20 untethered units to the military. But Step 3? Step 3 is the real game changer. In June of 2026, the Day VD untethered system completed its approved Navy use assessment. It is now formally approved by the U.S. Navy. This means any command can now acquire it, and those 20 previously delivered units, they can be deployed in active operations immediately. This U.S. validation basically opens the floodgates for global naval adoption, and actually, Coda is already training European navies on the system as we speak.
Let's move to Section 4 and see how this builds into their next-gen subsea tech.
Beyond human divers, Coda is aggressively targeting the underwater robotics market with their newly released Echoscope Pipe Nano Gen series. And this is a big deal. This tech consolidates multiple different sensors into a single power-efficient unit. It gives small unmanned vehicles real-time 3D spatial awareness, full perception visualization, and forward-looking obstacle avoidance. And the market response is already happening. They received an initial order just this quarter to integrate the NanoGen into an established vehicle program. Management believes that if these evaluations are successful, this could scale incredibly rapidly.
To put into perspective why scaling rapidly in this vehicle market matters so much, just consider the projected size of the worldwide unmanned underwater vehicle, or UUV market, by the year 2030, $11.1 billion. Back in 2024, it was valued at $4.8 billion. That is massive growth, totally driven by complex maritime threats and a huge need for low-risk, cost-effective defense technologies. ROVs, UUVs, and underwater drones, they are the future of maritime security. In Coda's new NanoGen series, it's positioning them perfectly to be the eyes of that $11 billion fleet.
Which brings us to our final thought for today's explainer. We've seen how Coda Octopus Group navigated severe geopolitical headwinds, using their diversified business units and incredibly tight cost controls to grow their bottom line by 87%, all while their core market paused. We've seen their world-class Dave Dade system finally get the green light from the U.S. Navy, and we've watched them launch directly into an $11 billion robotics market. So I leave you with this question to ponder. If Coda can nearly double its profits during a geopolitical storm, what happens to this company when the waters finally calm? Thank you so much for learning with us today, and we'll see you in the next explainer.